Jones says, is there a quick answer to how you use infinite banking with stock investing? I actually just put a video out on that last week. Check out that video. It's not a very, I think it's like a 4-minute video. Fairly quick. But, to give you another quick answer here, I would say you have cash value that you're building up inside your infinite bank, and you have access to that cash value at a certain percentage interest rate. It varies depending on the company. So you've got to decide if you want to borrow from the insurance company at 5 or 6% interest, or whatever the interest rate is, and put that in the stock market. You want to have a plan that you're going to earn higher than that in the stock market. And you'll be able to fund, you'll be able to pay that interest off. Because we want the growth in the market to compound, but we don't want the interest that we're paying in our policy to compound. So we also want our policy to compound. So if our policy is compounding, the cash value in our policy is compounding, we don't want the interest in our policy compounding, and then we also want to get growth in the stock market. Now, for me, there are strategies that we can do that is very safe. Let's call it very safe way to invest and still get a really good return in the stock market. Really good potential return. Okay. I love using options. I love using options in there. Covered calls, utilizing covered calls, along with some stocks in some solid companies that you believe in, is a great way to use, in my opinion. This is what I do. This is a great way to utilize money from your infinite bank, invest it in the market, and get a return that's substantially higher than the interest you're going to pay in your infinite bank. So, as it's not just with stock investing, but when we look at utilizing our infinite bank to do investing, we always want to use that. We want to use the ability for it to pay back that loan from your infinite bank and still get a return above that. We want to use that as the benchmark. So what I often think of is, by going with our infinite bank first, if we're using a whole life policy, let's say, we've got guaranteed growth, might get 4% guaranteed growth, maybe a little bit higher after dividends. Those are gross numbers. So after all of our expenses and everything, we're probably going to see 3 to 5% growth inside of our infinite banking policy. Okay. So that gives us a really good tool for saving money and holding money until we deploy it to invest. But it also raises the bar, because we're not going to take money out of there that's earning a guaranteed 3 to 5% interest rate. We're not going to take money out of that product and put it into an investment that is going to earn us less than that, or maybe even just slightly more than that. Like, we have no risk basically in that policy, and we're not going to take that out and try and earn 6%, but have it be 100% at risk. It doesn't really make sense. So we kind of get an upgrade. We get to upgrade our investment opportunities when we weigh it against that. And we get to turn down the things that it really doesn't make a whole lot of sense to do an investment for if we have to add in that risk. Not to mention, this is tax-free in our policy. It's tax deferred, but when we access it, we're going to access it tax-free. So you take a 3 to 5% interest rate, you make it tax-free. Now the equivalent of that in a taxable investment is going to be something like 5 to 7% probably. Maybe 4 to 7%. So now you really got to up your game. People that want you to invest in their things, they've got to really up their game and promise you a better rate of return.
Hope you found value in today's video. If you'd like to find out more about IUL and whole life, check out these videos right over here, and we'll see you next time.
Now go maximize your cash flow.